Roofing is one of those trades where the money looks good on paper, but the cash flow tells a different story. You're buying materials before the job starts, paying your crew while the work is underway, and waiting on the client to settle the invoice when it's done. That gap between outgoing and incoming is where a lot of roofing businesses run into trouble. A business loan can close that gap. Here's what you need to know. The most straightforward option for a roofing business is an unsecured business loan. You borrow a fixed amount, repay it in regular installments, and there's no property or asset required as security. For a roofing contractor who doesn't want to put their home on the line for a business decision, that matters. You get the funds, you use them where the business needs them, and you repay from revenue as it comes in. Roofing businesses deal with large material costs. Tiles, metal sheeting, insulation, guttering, and those costs hit before you've seen a cent from the client. An unsecured loan gives you the capital to order materials and start work without draining your operating account. It also works well for covering subcontractor costs when you're running multiple jobs at once. If your workload fluctuates, busier in summer, slower when the weather turns, a line of credit can be a better fit than a lump sum loan. You get access to a set credit limit, draw what you need when you need it, and only pay interest on the amount you've actually drawn. In the quieter months, you're not sitting on borrowed money you don't need. And when a big job comes in, you've got the capital ready to move. Equipment finance is worth separating out if you're looking at purchasing or upgrading gear. Elevated work platforms, scaffolding, nail guns, safety equipment, vehicles, these have real dollar values and can be financed specifically against the asset. The equipment itself serves as security, which typically means easier approval and lower rates than an unsecured loan for the same amount. Now, the numbers, non-bank lenders, which is where most roofing businesses end up because banks are slower, require property security, and aren't set up for trade businesses, will lend anywhere from $10,000 to $500,000. What they're looking at is your monthly revenue, how long you've been trading, and your bank statements from the last 3 to 6 months. Most want to see at least 6 months of trading history and a monthly turnover that shows the business is active and generating income. Your credit score is part of the picture, but not the whole thing. A roofing business with strong, consistent cash flow and clean bank statements can get approved even if the credit score has a blemish on it. Non-bank lenders are assessing your business as it operates today, not what happened 5 years ago. The application process is straightforward. An online form, 10 minutes of your time, your ABN and business details, and 3 to 6 months of bank statements. That's it. Decisions come back the same day or next business day in most cases. Funds hit your account within 24 hours of approval. No branch visit, no valuation, no weeks of waiting. Before you settle on a lender, compare at least 3 options. The headline rate isn't always the true cost. Fees and repayment structures vary and they add up. A comparison platform lets you see multiple offers at once without touching your credit file. Link in the description to compare business loan options for your roofing business. Takes under 10 minutes and there's no credit impact just to check. This is general information only, not financial advice. Look at your own situation before you commit to anything.